Friday, April 9th, 2021, Maneco 64, home of alternative economics and contrarian views. Things look relatively calm in the financial markets. Yes, we've had a few mini crises like Archegos and also Greensill Capital. But I think the British pound is pointing to a financial crisis, to a liquidity crisis. And why the British pound? Well, because if you look at it historically, when there are major crises like the dot-com bubble, when it burst in 2000, 2001, when you had the 08 crisis as well, and last year in March, the British pound took a big hit. British pound, in my opinion, is one of the highly leveraged major currencies. And when there is trouble in the system, it gets hit really hard. And why the British pound? Well, I think it's to do with the City of London's position in the financial system. It's the place where people financial institutions, of course, and people can rehypothecate positions. They can leverage. It's the biggest financial casino on earth, I would say, the City of London. And yes, the Bank of England is at the heart of it. The UK, many people don't realize, the City of London, of course, is the biggest foreign exchange market in the world. So we're going to look at the British pound today. The technical picture is not looking very good. And I would say as well, the troubles in the physical market for silver especially, but also for gold in the last 6-7 months. I haven't seen this before, despite a market that's showing that prices have come off since the high last year, above 2,000 for 6-7 months. And despite that, we're continuing to see a lot of shortage. The other day, John Adams noted that even the Royal Mint in the UK, they don't have any silver bars for sale. You go to their website and you click on a 100-gram bar or a kilo bar, and they have a price and everything. The premium's still quite high, 15%, which is relatively low compared to the other dealers. But it says awaiting stock. And you look also at other dealers in the UK, there is almost no silver bars there. For example, Atkinson's Bullion, they've only got one kind of silver bar, and they're one of the biggest dealers in the UK. So there is something wrong. Before I look at the British pound, there is a comment here from Eddie George. So who is Eddie George? Well, he's passed on. He was the governor of the Bank of England for many years. And in 1999, he was the governor. And this is what he said. And I'm taking this from jsmindset.com. They posted this back in September last year. It says, quote from Eddie George, governor of Bank of England in 1999, when the Bank of England dropped 400 tons or 50% of the BOE's gold on the market. Yeah, and they did that at the urging of Gordon Brown, who was the Chancellor of the Exchequer. And the rumor is that they're trying to protect the bullion banks. And most probably that's what they did. So they got rid of half of the nation's gold to protect the City of London. Rumor has it that the major beneficiary was Goldman Sachs. So this is what he said, and I quote Eddie George: "We looked into the abyss. If the gold price rose further, a further rise would have taken down one or several trading houses, which might have taken down all the rest in their wake. Therefore, at any price, at any cost, the central banks had to quell the gold price, manage it. It was very difficult to get the gold price under control, but we have now succeeded. The US Fed was very active in getting the gold price down. So was the UK. So you might be saying, well, they're going to do the same thing now. They're going to get it under control. Maybe, but I think it's very different this time. And why? Well, because the general public is much more aware of what's going on in terms of central banks, monetary policy. I meet a lot of people through my videos. I talk to them, and a lot of them tell me, yes, I started looking into the system, into gold after the '08 crisis. So yes, and especially now also since the 2020 crisis, that big collapse we saw in the stock market. Even the younger people are starting to look into it. I guess Wall Street Bets kind of raised awareness even about silver, and I think that's what's going on. So they're going to have a very tough time, and that's why I think it's been for so long, so many months, they haven't been able to cope with this. The physical demand is just starting to overwhelm them, I think. Yes, they're still slightly in control of the paper price, but I don't think it's gonna last very long. And if you notice the year there, 1999, this was just before the next crisis started. So I think we're in the same kind of scenario right now. 2020, 21, they're struggling with physical demand, but they don't have as much gold anymore to sell. And I think a lot of central banks do not want to get rid of their gold. Major central banks like the Bank of China, the Bank of India, the Russians, they're accumulating gold. Unfortunately, in the West, we don't seem to value gold that much. We never hear of the Bank of England or Federal Reserve buying gold, which is sad. All they want to do is use other people's gold to keep the price down, which is really nefarious. So let's have a look at the British pound, the technical picture. I'm going to start with a daily chart going back to around September 2019. So as you can see, prior to March last year, the pound was trading anywhere from 127 to 135. It was relatively stable, but then all of a sudden, from the beginning of March, around the 9th or 10th of March, it started just imploding, really. It collapsed. This is a big move for a supposed hard currency, right? And we dropped all the way to 114, and that was in about a week. By the 18th of March, the pound had dropped from, around 132 to 114. That's a huge move. And that was the height of the financial crisis last year, when the stock market dropped like 38%. Yes, granted, the metals did come down as well. Silver got down to like $11. But I have a feeling this time it will be different. And why do I say that? Well, because we're already seeing since last year huge physical demand, not just from the public, but also from central banks for gold and for silver. I think this coming crisis could be a currency crisis, and that could be not just the pound, but the dollar, everything versus the precious metals. But the pound especially is not looking great. So you can see that when the Federal Reserve threw everything at the system, they also helped out the central banks, especially the major central banks that they're highly connected with. And one of them was the Bank of England. They gave the Bank of England the wherewithal to borrow dollars through a swap line so that they could take those dollars, sell them, and buy pounds. And that's why the pound rallied so strongly since March last year. You can see that back in the towards the end of February this year, we got all the way up to 142.50 almost. And I thought that was amazing that we could do that. But I guess when you've got the Federal Reserve with infinite fiat currency giving you support, it is easy, of course, to get your currency back up and running. You will also squeeze out a lot of the shorts. But as you see now, this trend seems to be breaking down. Up until a few days ago, the British pound seemed to be holding that trend line, but in the last few days, it's kind of broken down. There is a technical level here. You can see in that little gray circle that I've drawn here, that's around 136.50 or thereabouts. I think that will be a key level. If we break through there, we're going to continue to see the pound go down. And in foreign exchange, the British pound is quoted, versus the dollar, it's quoted how many dollars you get for a British pound. So the lower this goes, the lower the pound goes. So it's £1, how many dollars you get. Right now with £1, you get $1.3690. Just wanted to clarify that. So now we're going to look at a weekly chart. So we can go back a bit in time to see the major crises in the past and how the pound reacted. Yes, during Brexit here in the summer of 2016, the pound did drop. So yes, that was a major crisis. It didn't affect the rest of the world, but I think at the time, I remember the Federal Reserve saying that they were going to keep an eye on it. So yeah, the pound dropped from, was very volatile, spiked to 150, and then dropped all the way to like 118 in the space of a few months there around the Brexit. But the most important one, going back in history, of financial crises, I would say is the 07 to 09, if you want to call it 08 crisis. And you can see that the pound, I was also at the time, I remember, why is the pound at 2.11? Why is it above $2? This was back in the end of 2007, November 2007. You can see that the pound topped at 2.11. And and it couldn't keep going, of course. And this was just before the crisis. So this reminds me of what went on in the last year or so when the pound went from 114 to 142. And I know 142 is a lot lower than 211, but unfortunately, the economy of this country has been declining even more than the US economy, I would say. And it's really sad. So I think we are at that juncture where it's pointing to a major top in the pound. And look what the pound did then in the 08 crisis, which was a huge crisis. It went from 211, and then by, let's see here, January 2009, it had dropped all the way to around 135. Yes, it stabilized for a few years there. Again, after the major central banks came to rescue the system, while also governments bailed out banks. So there's the second example of the pound, how it reacts in a major crisis. So now let's go back to the dot-com bubble. When it burst, you can see the pound was trading in a quite wide range, basically from around 150 to like 170. And then when the crisis broke out in 2000, 2001, you can see that the pound again had a major drop. It wasn't as sharp as the 08 crisis, but it bottomed around May 2001, around 136. That 136, 135 level, that seems to be quite an important level. And it's interesting that right now we're right around that area, 136.97. So definitely a key level here, 136.60, 135. And it's pointing to me that there's a big probability of something happening. I don't know what it will be, but I would keep an eye on the British pound, even if you not in the UK, if you're somewhere else around the world, keep an eye on the pound. So with that, let's quickly look at where the markets are this morning. It's 8:44 a.m. London. Gold and silver did quite well yesterday. Gold tested that midpoint of a double bottom that I've been talking about. I think we went up to 1759 yesterday. Overnight, we've seen gold come off a bit here. Yes, they're not going to make it easy for gold to break out, but I think it's only a matter of time. It could be today, it could be next week. Right now we're at 1746, down 9. The low's been 1743.80, and the high's been 1758. So you can see the market is really focusing on that midpoint. Silver's down 25 cents or 1% at 25.18. The low's been 25.11. In the high 25.52. Yeah, I'm just continuing to stack. I've put a bid in on eBay for about 6 ounces worth of threepenny bits. They're 3 pence from before 1920. They only have about 1.5 grams of silver in them, but yeah, I'm buying it in bulk, and I can tell you it's got over 4 days, the auction. And last I saw, I had the highest bid, but it's like the equivalent of more than 40% over spot. So even on eBay, it's hard to get silver. So I'm continuing to stack as much as I can, physical silver, real silver, not paper, not ETFs, not synthetic silver. That's not really silver. Onto the stock markets, Dow is up 40 points, Dow future. NASDAQ futures down 7 points. S&P is up 4.5 points, just above 4,100. We've got sterling down 0.25% here, just below 137. The low's been 136.69. So yeah, that 36.60 level is quite key there. Euro is down 0.2% at 118.93. What about the euro? Do I think the euro is going to get hit hard? Maybe a little bit, but I think it's more the pound. The pound is the currency I'm really focusing on in terms of maybe forecasting a big liquidity crisis or a big crisis. We've got the dollar up 0.25% versus the yen at 109.50. The dollar is up 0.2% versus the yuan at 656.80. High grade copper is down 0.75% at 406. And WTI crude is down 0.4% at 59.38. The 10-year yield is at 167. So that's up about 4 basis points. So yeah, the bond market right now is fairly stable, but we need to keep an eye on that as well, of course. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day and a great weekend. Take care. Bye.